it's me, Myra, at Down Home Money, a simple approach to financial freedom. It's Tuesday. It's my day. It's my favorite day of the week. So excited to be with you guys. And once again, I've got you one stock you need to take a look at because it's a buy. Okay, are you ready? Are you ready to hear what stock it is? Well, first, let me tell you a little bit about this stock. So this is a stock that I've been investing in, I don't know, I guess probably, I would say I've been investing in it for the whole 2 years that I've been buying stocks. You know, I started my portfolio. I'd never done like a brokerage portfolio. I just invested in the S&P 500 for my SEP, my Simplified Employer Pension Plan. And that's what I've done over 20-something years. Within 10 years of investing like $100 a month and then trying to max it out as much as I could every year. Within 10 years, I had about $160,000 in my account. And then the next 10 years, it blew up. Within 20 years' time, so the first 10 years, 160, the next 10 years took me to, I had $1 million, little over $1 million in my account after 20 years of consistently investing and allowing it to compound. So I share that with you, not to impress you, but to impress upon you, I was a hairstylist doing $5 haircuts. If I can do it, you can do it. It's not how much money you make, it's how much money you keep and what you do with it. And are you buying assets that throw you off a passive income? And that's what stocks do, especially dividend stocks because of all the compounding effect. So what you find here at my channel is I share with you my portfolio. I share with you what I started. So in March of 2020, when the pandemic hit, I was bored. I was stuck at home. I owned 3 real estate franchises at the time in 3 different states. So I was traveling all over and it all stopped. And so I was at home and I thought, what can I do to make money and have fun? And I started a YouTube channel and I started investing in a brokerage account and I opened a brokerage account and I started investing in dividend stocks. Well, who knew that 2 years later, I would have built a portfolio. My first goal was $500 a month, then $1,000 a month, then $5,000 a month. And then now I'm going for the gusto of $10,000 a month in dividends. Now, look, when you first start, it's $10 a month. It's just like anything, okay? You can't own the company until you've worked at the front desk. I mean, seriously, a lot of people, I get a kick out of everybody wants to own the company and be the boss, but we all started at the ground floor. I did too. And this is no different. You start with $100. Open an account. Just open the account. Put your money in it. Let's go. Start studying the market. Learn how to build, whether you're getting a monthly dividend of $1. Who cares? It's $1 you didn't have before. And that's how it starts. So don't use the excuse, well, you've got money. That's why you've done that. You know what? I have been in places where I didn't have money. Matter of fact, I've struggled paycheck to paycheck, or like I would say back then was haircut to haircut. So I just want to empower you to take action and stop using excuses. There's no excuses for you not preparing for your financial future. And that's what this is about. So today, I'm going to share with you one stock that you can buy that's really cheap because I'm trying to bring you some decent stocks that are relatively priced. This is in the $7 range. So guess what? $70, you have 10 shares, okay? You have 10 shares and they pay 88 cents a year. You just made $8.80 more this year than you did last year. Boom. It's that easy. You just have to get started. So y'all got the math on that, right? 10 shares. There's $7 range. So let's just say that was $70. Cost you $70 for 10 shares. And they pay 88 cents a share. 88 times 10. Whoop, whoop. you now, or is that $8? $8.80. That's $8.80. So now you just built you a passive income that you don't have to work for. I'm going to teach you how to work smarter instead of harder. And it's a matter of getting started. Instead of going out to dinner, go buy you a couple more shares. I mean, start sacrificing and doing delayed gratification so that you can live like nobody else at a later date. This is about building your financial future. That's what this is all about. So this stock, to tell you a little bit about this stock, so hang on, I got a little sheet here. Annaly Capital Management. That's what we're going to talk about. NLY. Annaly Capital Management, Inc. Okay? All right. So let me share with you what they do. Okay. Annaly Capital Management engages in the investment and financing of residential and commercial assets. It operates through the following investment groups. Okay. Agency, residential credit, commercial credit, and middle market lending. The agency group invests in agency mortgage-backed securities. The residential credit group involves non-agency residential mortgage assets within scrutinized products and whole loan markets. The commercial real estate group includes commercial mortgages, loans, securities, and other commercial real estate debt and equity investments. The middle market lending group provides financing to the private equity-backed middle market businesses across the capital structures. The company was founded by Michael A.J. Farrell and Wellington Jamie Dennehy Norris. My gosh, these people got long names. On February 18th, 1997, and is headquartered in New York, New York. So let's talk a little bit about it. Let me tell you a little bit about what I've seen, what's going on. So the 52-week high, right now it's sitting on a low. I've been buying on the dip. I personally own 6,200 shares, and it's paid me, the last dividend I received was $836.37. So it pays on the quarter, so I get that 4 times a year. So that's incredible. As of yesterday, it was trading in the 719, 717 range. So it hit a new low because before yesterday, the 52-week low was $7.37. The 52-week high is $9.54. The dividend yield is 11.72%. So I'm buying, and I'll share with you some, y'all know how I love Market Grader, and it's an analyst report, and it gives because remember, I'm a novice, and so I want easy stuff for me to read. I don't want to have to go study all this stuff before I buy a stock. Just give me the basics, and I love an A, B, C, D, E, F, G rating, right? It's just easier. Well, this company grades the stock by its fundamentals. And what it does is 24 fundamentals. It grades by the 24 fundamentals. And the highest score you can get is 100. Well, this stock got 74.1, which makes it a buy. Now, if you're a novice and you're wanting to learn, you can go to Vanguard and pull all these reports for each stock you're studying. I love it. So it's a buy based on Market Grader's 24 fundamentals. So what's kind of cool is one of the fundamentals is cash flow. Of course, right? That's how they pay a dividend, cash flow. So it is a B plus on cash flow. And let's see if it says anything important. I've got some really good information on cash flow. Annaly Capital Management booked $2.72 billion in operating cash flow in the 12 months ended last quarter. It more than tripled its $535 million for a year ago period. So that's incredible. So that's good news. Thumbs up. Next, let's talk about growth. It got a C for growth. And remember, when you have these high dividend stocks, when they're paying a high percentage, right? A lot of times they're not necessarily growth because they are their rate is so high. They're paying it out. So it says, Annaly Capital Management business returned to operating profitability in the last 12 months through last December, despite a significant deterioration of its top line as it reported a very large drop in sales from year earlier period. Since it's also reported an operating profit for the period, reversing the prior year's operating loss, it's clear the company has cut operating expenses pretty drastically as it tried to compensate for a very poor business environment. The company extended its string of positive earnings surprises last quarter when it reported fiscal fourth quarter profits of 0.28 cents a share, surpassing the per share consensus estimate of 0.27. Not surprisingly, the ongoing profit weakness has continued to adversely impact the company's payout to its shareholders, which has declined not only in the last year, but also relatively to what it was paying 3 years ago. Well, remember, they had cash flow problems, and now the profitability has tripled. So cash flow has tripled, so good news. They're going to get this under control. Profitability, A. So the reason they got an A is because they tripled a remarkable 409.75% on their total revenue, which is incredible. So they went from 2020, they ended the year 2020, 583.26 million in total revenue, to this year net income was 2.39 billion. So they have definitely made a turnaround, right? So that's pretty awesome. Value, B+. So they scored a B+ for value. Shares of Annaly Capital Management trade at 7.37 times expected earnings per share in the next 12 months. A very significant discount to our optimum PE ratio of 17.21. It's incredible. The PE ratio, that's pretty doggone amazing. Right now, the PE ratio LTM is 4.58 compared to the PE ratio forward is 7.37. What they're saying is that their optimum PE ratio when they're looking at stocks is 17.21. Well, this just nailed that. I mean, that is 4 times more than what the actual is, which is incredible. So theirs is 4.58. So way below the 17.21, which is fantastic. So B+ on that. Annaly Capital, I'm buying more. I'm buying on the dip. I love the dividend and what I'm making on it. Check it out. See what you think. I'd love to hear some comments if you're buying, selling, or what you're doing with Annaly Capital Management. Love to hear about it. You know, that's how we can help each other. I'm here to help you. Again, I'm a novice, but I'm learning all along the way. And I started just like you. My first goal was just, you start just wanting to make $100 a month, and then you go to 500, then 1,000, and build this out to where you can get to a point in your life where your passive income pays all your living expenses. Then you can work because you want to work, not because you have to work. And that way, if you don't like that job you're working at, you don't have to work there. All right, I'll see you next Tuesday, every Tuesday. Be sure and come for another video on how to build another passive income stream. We'll see you next Tuesday. Give us a thumbs up and subscribe. And hey, don't forget to order my book, Down Home Money, A Simple Approach to Financial Freedom. If you need a little kick in the butt to get started this year towards your goal for financial freedom, that book down below, click on it. Order it from Amazon. I'll see you next Tuesday.